Let's take a look at some charts on Link from this week's article on Brave New Coin. So Link has quickly become the backbone of decentralized finance, or DeFi, in that lots of the price infrastructure and the data infrastructure flows through Link and Link nodes. So how this works, this is the ETH USD price aggregation. There's 21 different nodes. They are all pinged every so often, and at least 11 of them need to respond in order for a price to print or data to confirm a price. So this is used for all sorts of ETH-related DeFi products. And DeFi has become very popular over the past few months, and Link has benefited from that greatly, price-wise. Whether or not it's justified is another question. But being DeFi adjacent or fueling DeFi has certainly helped Link in that regard. Now, Link has lots of partnerships, way more than are even listed here. And whenever I see a crypto company in a partnership with anybody, my question is always, is it just PR or is there an actual physical connection here? Is there a node being ran by Google, for example? Is Google working with Link nodes? Is Google working with Link oracles? What is Intel doing? Is it just proof of concept? Is it have a roadmap, a plan? That's always a question. So Link has lots of hype in that regard from the PR perspective. Now the community will tell you that all of these partnerships are the next best thing since sliced bread. I will admit that Link's partnerships versus other partnerships with other coins are more leaning towards actual legitimate, tangible use cases versus a PR stunt. So they certainly have that going for them. It's just hard to point to each partnership and each exact connection other than PR. That's always a challenge for any coin, not just Link. And I always like to look at anything that's done an ICO, anything that's a pre-mine, anything that's not proof of work. You have to pay attention to the supply, because that, at the end of the day, that rules everything. That rules price, that rules the community. Look at all these DeFi projects, look at the debasing, look at the insane price of YFI. It's all about supply, it's all about demand, it's all about that intersection together. So when you have a company like Smart Contract Limited, who is like the holding company or the development company for Link, they're decentralized development, but specifically the Smart Contract Limited, who did the sale, the token sale. You have to look at how much did they get, how many tokens did they get in the beginning, how much are they selling now, how's that affecting price. So it appears as though since February, March this year, selling has increased from 500,000 tokens a month to 1 million tokens a month to now 2 million tokens a month. As a trader, I don't care why they're selling more. The important part is being aware that they're selling more. Now you can read about how they're increasing biz dev stuff and they need more money. That's fine. That's great. Good for them. But at the end of the day, what are they doing? They're selling tokens on the market. So unless the market can absorb these tokens, price will go down. That's just basic supply demand, right? They had bursts of selling, I forget if it was August 2018, 2019, sometime. Basically, the last all-time high was also a burst of selling. This is more even selling, but selling has increased. And you can say arguably it's not like that big of a deal. It's not that many Link. It's not that much money. But the exact amount is less relevant than, is it more than the buying demand at that price? Which it appears as though it is. Not saying that this selling alone is bringing price down, but it's certainly influencing it. And you can't deny that. And when you look at how much Link they have left, roughly 265 million, this will continue to be sold at 2 million a clip or whatever the implied contract is. There's no specific vesting for any of these tokens. So they can do things like sell more 1 month versus another, which is fine. That's not the point. The point is you need to know when they're selling, and you can do that by watching the wallet, the dev wallets that they have listed. Circulating is 385. So you can see how complicated it gets when you're talking about market cap. Do you include these tokens? They're non-circulating. Do you include these tokens? They're non-circulating. So there's always some uncomfortability there, because realistically, you're just talking about circulating, but then you get things like year 2050 market cap. That assumes basically at that time that they've sold all this is circulating, whatever. And then you get a different number, obviously. All right, let's look at some on-chain stuff. Nothing has boomed quite like Link other than ETH. Link and ETH have both, on-chain wise, increased drastically in demand. Link is on ETH, so part of the ETH demand is also Link demand. Very small portion, but a non-negligible portion. You can see transaction sizes are up. Transaction counts are like quadruple they were from earlier this year, double from July. It's insanity, right? Like some of this is speculation, some of this is node stuff. There was a spam attack on the network that was a big contributing factor here as well. So there's lots of stuff going on, but in a vacuum, there's clearly an explosion of activity, bullish. You can't deny that when transactions per day are at an all-time high. The next thing to pay attention to is whether or not this can sustain an all-time high. Can it remain at these levels after the spam attack is over, which it is now? Looking at NVT and active addresses, again, active addresses all-time high, incredibly bullish, double or triple from last year or more, and it just continues to increase week over week, month over month. No question about it. NVT is decreasing, which is bullish. It says that the market cap has not priced in the on-chain activity, essentially. So to see it decreasing versus increasing is definitely bullish. So the on-chain stuff looks great in a vacuum, but you always have to pay attention to that supply side, who's selling when, and how does it affect price. If you look at Google Trends, no surprise, Google Trends at an all-time high, past ICO, past 2019, the previous all-time high. You typically see this with new all-time highs in price, new all-time highs in Google Trends. They don't always go hand in hand, so it's good to watch both, obviously, because if this moves to all-time highs before price, there's a pretty good chance price is going to catch up eventually. It's certainly more bullish, a bit of a bullish divergence if this is increasing and price is not. Let's take a look at some technicals. 50, 200 EMAs, VPVR here, and yearly pivots, volume, RSI. So a few weeks ago, price was the farthest it's ever been from the 200 EMA. It was past the R5 yearly pivot, which is a major feat in of itself. These pivots are more valuable when there are more years of data history. So you can see this wasn't even a full year that it's taking into account here. So next year, 2021, those pivots are going to be much more reliable as far as support resistance, but even these were pretty much bang on the money all the way up if you consider this a ladder for support and resistance. At this point, you'd expect price to return to 8 at least. You have the R3 yearly pivot, the 200 EMA, which is really the big determining factor, and a teeny tiny volume node here. If 8 fails, it's back to 4. Somewhat unlikely, but certainly possible. I mean, it's up 1,000% over the past few months. Some pullback is needed and necessary. People will take profits. People will not settle for being a community member of Link. Sorry, Marines. A lot of people that rode this on the way up are probably starting to get nervous and antsy and ready to sell. That doesn't mean this can't go to 55 in a couple months. It just means once the momentum has slowed, people start to get nervous and they usually roll over. And then you get more and more rolling over, and then you're back to the mean at around the 200 EMA. If you look at the cloud, which absolutely nailed this trade since April, Kuma breakout, price above cloud, TK bullish cross here, and it's just been textbook. It's been beautiful. You had your Kijun bounces here, a close one here, maybe with a wick, and then this last one broke the Kijun, and you're getting a TK bearish cross here. So at this point, you're out of your long based on cloud rules, and you're waiting for either a bullish TK cross above the cloud to relong or a Kuma breakout to the downside to enter a short. But where it sits right now, it's a bit of a no trade zone, especially if it gets inside the cloud here. If you look at the half year MA and then MA multiplier of the half year MA, you can see it captured this high here, captured the high here. It's back in the median now. So this will probably keep moving up, this half year MA, but $6.50, $8, that's not out of the question, certainly. This is always a good indicator to use and to watch for because it's agnostic to everything else. And if it catches the highs and it catches the lows, that's what trading is all about, right? So it told you be careful up here in the long because it's just as overbought as it was in July 2019 in regards to distance from the half year MA. If you look at the Link BTC price, another textbook situation with a trend with a pitchfork here, multi-year pitchfork, which essentially bounced around price in the median line and then exploded past the R5 again. with a bearish divergence. So at this point, a buy sits around 77,000 sats. You're looking for the median line, this R3, the 200. It's all the same stuff as far as mean reversion is concerned. But otherwise, this is still a bullish trend. It just likely needs to regather its strength, consolidate around the mean. Then lastly, Link ETH, one I've been watching pretty closely for the past few months because Link is on ETH, obviously. ETH is beginning to transition to proof of stake eventually. You'd expect the hype for ETH to outweigh Link eventually. At least I do personally. So what that means for price is I expect this to reverse. Once it breaks the 200 definitively, again, the power of the high time frame EMAs, it just has ridden this EMA since 2018. So it looks fine trend-wise now, but if this starts to dip down below 019, below this pivot, below 014, if it starts to make lower lows, then I think it's pretty clear in the near term that this is going lower. Right now, I don't think there's a trade here, but it's definitely worth watching if you're holding both or trading both or looking at both. So overall, linked price-wise extremely well. Watch that supply, watch who's selling and when. On-chain metrics look great. Google Trends look great. Trend metrics look great on technicals. Definitely got a little overbought. Nothing wrong with that. Just needs to pull back to the mean and potentially have another go in Q4.